A little bit of a wobble last week globally that rubbed off on us. But guess what? Regardless of that, the markets and globally, not just us, managed to finish off at a fresh record high. In fact, the S&P has had quite the winning streak. We'll talk about that in just a bit. But last week alone, you had the NASDAQ notch up about 6%. The S&P 500 index was higher by about 4%. The Dow as well eked out a good 2.6% off a move. Not just them, but even us. Like I said, it was a global tide which lifted all the markets up, and we were not left behind, irrespective of the little bit of a flip-flop that we saw start of the week and midweek. We managed to finish off with a good 2% gain, and same was the case with some of the European markets as well. But of course, now all that we're going to talk about, I guess, this week is all the central banks across the world which are slated to come out with their interest rate decisions. And yes, what a fab finish it was for our markets alone.
Sasha, it was a very solid week of trade, if you frankly ask me, both in terms of how markets both locally and globally made a comeback and the factors which really were at play. Now in isolation, we can talk about, first we can talk about Indian markets underperforming the global market, but what really matters here is that the two markets which in a sense are really the important markets, one is India and second NASDAQ or US tech stocks, they've actually made a comeback. So what factors were at play? And I would like to divide the market, and what really moved the market and what could influence the market are these four factors. First is Fed, second is FIIs, third are financials, and if these factors are at play, then the FOMO factor. So the market in a sense will get influenced by these four factors. We'll discuss all those factors individually. But first, Fed. Why Fed is important? Now the market narrative is Fed will move this week. Instead of 50, it's going to be a hint of, it's going to be a bend towards 25, which means the FIs, which means the US economy is not going through what could be called as a painful fear of a hard landing, because if Fed is cutting 25, that's okay. The second is FIIs, and for me, that I think is the biggest moving part, at least for India. Why? Because FIs have been net sellers and they've turned net buyers. And now FI dominated stocks have potential to outperform. The sellers in the market are not there. DIs, well, the flows continue. FIs who've been net selling the market down, they've also turned net buyers. So that's the second factor which is at play. So it is Fed and FIs which were at play, which is impacting financials. If financials go higher, the other F, which is FOMO. So if you have to make a boundary, these are the four factors which are at play.
Oh, well, yes, and that's the reason Nifty Bank performed the best it did in the last 12 weeks, because it was solid gains, and especially at the end of the week, there was almost 1,000-point rally on the Bank Nifty within a matter of a couple of days. And talking about those FII flows then, in fact, the month of September is tracking the best FII flows so far. In the first half of the month, we've already seen inflows to the tune of almost 17,000 odd crores, and the second best monthly inflow figure from the FII is as much as 5,000 crores. Nikunj, is it anything to go by that perhaps FIIs are finally back? There's a bit more clarity when it comes to the interest rate cycle, and maybe that's getting them back now.
See, what has history taught us? And what have patterns, in a sense, if you connect the dots, which patterns have emerged in the past? That typically when Fed has cut rates, FIs, they come back. Typically when macros are on your side, for institutional investors who bet on country, they tend to make a comeback. Right now the Fed has pivoted and is likely to cut rates, and macros on the front of crude, on the front of rural recovery, on the front of interest rates for India are looking strong, and for China macros are not improving. So it's a lethal combination of good macros and a Fed rate cut, which in a sense could really have an impact on the way how flows into Indian markets actually would move. So what you actually may see, and I will not be surprised, is that we've seen on Thursday, we saw that big 400-point Nifty move. Friday, we did not see a bit of a follow-up. But if we see a bit of a follow-up today and tomorrow, then I will not be surprised that we are in for a big move and the FOMO crowd will start coming in. Because if you connect all the factors on the global front, on the local front, on the technical front, on the liquidity front, when these combination of factors align like the way they're aligning, then that really would be backed by a big market move. So I will stick my neck out and say that out of the three factors which I mentioned, Fed, FI and financials. I think the fourth factor, FOMO, could be at play if we see a bit of a fall of buying. So if we see a fall of buying which was missing on Friday, but if we see that on Monday, Tuesday, I think we are in for a big giant move across the board in markets then.
Yeah, and
If you like this video, then like, share and subscribe to ET Now.